The main question this week, the market's finally trying to move. After weeks in a range, the first cracks toward a shift in trend showed up on the lower time frames. But Wednesday's Fed meeting still didn't break the range, and the chop cuts both ways. So we break this down carefully. The crowd's still being held on expectation, and the flows are below the zero line. Quick one for new viewers on timing, and today it's especially fitting. In the last review, I said Wednesday's a scheduled Fed meeting. React to fact, not to expectation. And that's how it played out. On Wednesday, July 29th, the Fed held the rate for the fifth time in a row, but with a rare split. 3 voted for a hike, and no hints on the path ahead. Stocks went into a sell-off. This is why the week closes Wednesday in the system I trade. That's where all the stored-up information comes out at once. Wednesday's the climax, Thursday's the reaction, Friday's when you take stock. That's BIOS time. On to the market. Same frame. They're holding us in a range and marinating us. But something new showed up from below. The weekly, 5-day, and 3-day charts barely changed from last week. As expected, they slid a touch, but didn't even test the previous lows, closed a bit higher, and stayed in the same range. Trend dominance on the higher ones holds around 9 to 11%. They don't let it to the floor, but there's no activity either. They keep marinating us. The daily chart, below zero line since the start of May on both ADP and trend dominance. On July 27th, we tried to approach zero, but on weak trend dominance and sluggish ADP, it didn't work. The bounce was false, back below zero. The 12-hour chart confirms the same. The 27th, an approach, a close at zero, and a return below it. We're not leaving the range, testing the lows carefully. And here's the new thing worth a closer look: the lower time frames. The 4-hour chart sketched out an attempt at a local attack on zero line, but an early one for now. Since the 30th, trend dominance has been treading at 30%. They haven't taken it lower. The 2-hour chart is testing zero more actively. Yesterday and today, touches and false breakouts, but there's a squeeze on ADP, and trend dominance is held at 30%, and it's moving into attack. That's the hint that they might start changing the trend. We'll see how they behave. Now, Bitcoin. The weekly chart is where it was, didn't break its lows, a pause, a hitch. The 5-day chart is treading in place since July 21st, 10 days in a range at -7%. That's the curl from last week not leaving the spot. The 3-day chart, and since the 21st, attempts to touch zero without a successful break, a modest pullback with no break of the lows. The daily chart shifted a touch to the downside, but didn't break local lows. It could calmly test -1.3 and return above zero again. But we don't guess, we watch the facts. Everything's in the same range, and it looks like the broader market. The 12-hour chart is also in the range, sawing at the zero line a bit more clearly, but with no break of the low. Bitcoin's 4-hour chart is below zero, but on its local supports, and the problem, like we discussed last week, would be a drop below -2%. The 2-hour chart looks the same. You can test support at -2.3 freely. The main thing is not to break it. Let's pull it into a setup. Until the market's daily chart and the 12-hour chart break confidently above the zero line, we're not expecting an upward reversal here. So while the 12-hour and 4-hour charts are red, we trade with the trend, short, with group orders. Today at 11 in the morning European time, the 4-hour chart closed near zero, weekly, and after that the pullback down continued, which the 2-hour chart confirmed a close at zero and a pullback. Points like these, a touch of the zero line on the 4-hour, 2-hour, and 1-hour charts while the higher ones are red, are the best spots to enter short joining the trend. You can scroll back through the history and see for yourself how they play out. And about those cracks. The 1-hour chart is sawing hard at the zero line on both trend dominance and ADP. The chop is very active, very sharp, and it's holding in a range. It doesn't go far above, doesn't go far below. And a chop always comes before a trend. But since it's going both ways, we don't know in advance where it'll lead. So we won't get ahead of ourselves. Without a clear hold above 0 on the 2-hour and 4-hour charts, the trend won't start to shift to the upside. While the higher ones are red, we stick with the trend and don't take extra risk. What to watch from here? The shift in the picture won't start from the higher charts, it'll start from below, where from the 2-hour and 4-hour charts. Their real hold above 0, confirmed by trend dominance, will be the first honest signal that the trend is changing. Until then, the 12-hour and daily charts hold us below 0, and any bounce up without that hold stays false. And separately, today's the end of the month and monthly options expiration. That adds sharp moves you can easily mistake for a trend change. So we react to the hold, not to the first impulse, which is exactly what this whole review has been about. That's it for the week. Every indicator I showed today is on the platform, link in the description. There's a free tier, so you can see how it works without putting anything in. See you next Friday.